Hello, everyone. Welcome to the NT Trading. The Indian stock market has been facing an extended period of downward pressure, with both the BSE Sensex and NSE Nifty recording significant losses. As we review the recent week ending October 25th, it's clear that several factors have converged to weigh heavily on investor sentiment. The BSE Sensex dropped below the psychologically critical 80,000 mark, closing down 2.24% at 79,402. While the Nifty 50 shed 2.7% or 673 points to settle at 24,181. Since reaching record highs on September 27th, the Nifty 50 has declined by 8%, marking the market's fourth consecutive weekly decline and a low not seen in 4 months. This negative trend has been primarily driven by a combination of geopolitical concerns, muted quarterly earnings, a tepid demand environment, and consistent foreign institutional investor (FI) outflows. The selling pressure has affected several sectors, with banks, FMCG, autos, pharma, metals, oil and gas, and real estate stocks all dropping between 2.5% and 7% over the past week. Analysts have noted that a reversal in this trend will likely hinge on both a reduction in FI selling intensity and the outcome of the upcoming U.S. presidential election, which could shift global economic expectations. On the corporate front, earnings for the September quarter continue to be a key focus as market participants monitor sector-specific performance. While many companies are feeling the squeeze of a challenging demand environment and margin pressures, these earnings reports could offer a glimmer of hope or further challenges in the weeks to come. Looking internationally, a broad array of economic data from the United States and other major economies is set to capture investor attention. The U.S. will release its advanced GDP growth estimates, PCE prices, and real consumer spending for the July-September period. Notably, the U.S. economy saw a 3% growth rate in the previous quarter, and how this growth trend continues will be a critical indicator of economic health. Beyond GDP, final manufacturing PMI numbers for October will emerge from countries including the U.S., China, and Japan. In addition, the Eurozone's preliminary GDP growth rate data and the Bank of Japan's interest rate decision are also due, adding further complexity to the global economic landscape. Domestically, key economic indicators such as the manufacturing PMI final reading for October, infrastructure output data for September, and fiscal deficit information are slated for release soon. The preliminary HSBC India manufacturing PMI for October indicated an increase to 57.4 from September's 56.5, signaling potential growth in manufacturing activity. On November 1st, data on bank loan and deposit growth will also be released, along with foreign exchange reserves figures for the week ending October 25th, providing insight into the country's financial landscape as we head into the end of the calendar year. One critical factor driving the market's recent decline has been persistent foreign fund outflows. Foreign institutional investors offloaded over 20,000 rupees crore worth of shares in the cash segment over the last week alone, bringing October's total net FI outflow to over 1 rupee lakh crore, the largest monthly outflow on record. In contrast, domestic institutional investors, DIIs, have provided a much-needed counterbalance, purchasing 22,915 rupees crore worth of shares during the same week. In total, DIIs have infused 97,091 rupees crore into Indian equities in October, effectively offsetting the massive FI outflows. This consistent support from domestic investors has helped maintain market resilience in the face of otherwise significant selling pressure. Additionally, the Indian rupee has remained at the 84 level against the US dollar for 4 consecutive weeks. A weaker rupee generally makes imports costlier and could exert additional strain on corporate margins. Meanwhile, rising US bond yields and a stronger dollar add further challenges, as they typically drive capital away from emerging markets towards safer assets in the United States. The coming week is likely to see a continued focus on both domestic and global economic developments. For the Indian market, a slowdown in FI selling or more favorable quarterly earnings reports could provide some relief from the current downtrend. Until then, investor sentiment will remain cautious as markets navigate a landscape marked by geopolitical uncertainties, economic data fluctuations, and shifts in global investment flows. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, Please like, share, and subscribe. Thank you.